हेलो एंड वेलकम एवरीवन, दिस इज प्रोफेसर सिद्धार्थ सुराना। आई होप यू गाइस आर डूइंग गुड और मैं तो हमेशा मस्त ही रहता हूं। वेलकम टू एपिसोड नंबर 1 ऑफ रिवीजन कम अमेंडमेंट लेक्चर फॉर May 23 and November 23 exams, 100% English language. Primarily these lectures are for CA final students, but there are plenty of topics which are common. Almost the entire syllabus of CA intermediate students will also be revised in course of these lectures. For example, in the very first chapter introduction, we discussed the tax rates. Tax rates are applicable to final as well as intermediate students. Already I have told you that this revision will be done from our handwritten book exemption 3.0, and that is why I made a prior announcement that if not already booked, kindly book your exemption 3.0 as early as possible. So without wasting any time, let us start with revision in the order of the book that we have. These are the 43 chapters, 40 in the book and then 3 as we do from the ICAI study material directly. All the students are aware. Starting with directly the first chapter, which is basically introduction as we cover in our CA final syllabus. Section 231 says that person includes individual, HUF, firm including LLP, all tax provisions, firm, LLP same except a couple of things which we learn in partnership chapter, company, AOP, BOI, local authority, artificial juridical person, and we are going to learn tax rates of all these assessees in our, by the way, this is a revision lecture. So this is only revision of what you have already studied over 200 hours of our regular lectures. Kindly do not make this as your first time study or your only study. This will help you to revise what we have already covered in class. We start with tax rates for the previous year 20 to 23. So obviously in our regular lectures, we have discussed this, that if your exam is in May 23 or November 23, then the applicable previous year will be 20 to 23. The applicable assessment year will be 23-20. For the budget, the Finance Act applicable to your exam is going to be the Finance Act of 2022, which was introduced last year. So those who follow me on Twitter or Instagram are aware of the fact about the enlightenment that I gave you about the recently announced budget on 1st February, that if your exam is in May 23 and November 23, then you just order a vape and chill, because you have to study with your existing books. Nothing that has been announced in the latest budget will be applicable for May or November 23. This budget of 23 will be applicable for May and November 24. So last year's budget, Finance Act of 2022, which is applicable for previous year 22-23 and assessment year 23-24, will be applicable, and accordingly we are going to learn the tax rates starting with individual, and the same tax rates are applicable for HUF, AOP, BOI as well as artificial juridical person. Firstly, if you are a resident individual less than 60 years, because as we are aware, greater than or equal to 60 falls in senior citizen up to 79, and greater than or equal to 80 falls in super senior citizen, that is 80 and above. So anybody less than 60 years, these rates will be applicable. If you are a non-resident, irrespective of age, are we aware that the benefit of higher basic exemption limit for senior citizen as well as super senior citizen is available and applicable only and only if the assessee is resident. So all non-residents will also fall in these rates only. The separate rates are only for resident senior and resident super senior citizen. And further, if you are HUF, Hindu undivided family, AOP, BOI, group of persons who have come together for a common purpose or goal, artificial juridical person, any assessee not falling in the first 6 categories will fall in this. Then they will also have the same tax rates as the normal individual less than 60 years. Non-resident will have the same tax rate. The separate rates are given only for resident senior and resident super senior citizens. So what are the slabs applicable for individual less than 60 years, non-resident any age, HUF, AOP, BOI, AJP, up to first 2,50,000, which is the basic exemption limit, there will be no tax. From 2,50,000 to 5 lakh, 5%. So in this slab they get 12,500. I hope you are very well aware. 250 ka 5%, 12,500. Here 5 lakh to 10 lakh, 20%. So the tax in this slab works to 1 lakh rupees, 5 lakh into 20%, 1 lakh rupees, and anything after 10 lakh is going to be taxed at 30%. So if we count that way, year 0, year 12,500 and year 1 lakh, and here basically whatever is the excess you have to apply 30. So in class we have learnt like this, that whenever we are calculating tax as per old regime according to these slabs, what we do is take the total income, subtract 10 lakh rupees, apply 30%. Total income minus 10 lakh into 30 plus 1,12,500, which is the fixed amount of tax up to income level of 10 lakh rupees. And that's the old regime. New regime we will be discussing obviously separately. These are the basic tax rates. Obviously, we know about the concept of rebate, surcharge and cess. We also know that these are basic rates in the old regime, and we also know that any income falling in chapter 12. Chapter 12 means special rates of tax, LTCG, stock market, casual winnings, all that is going to be obviously segregated. So total income will be divided into two parts. Special income will be subjected to special rate and normal income will be taxed at these rates if you fall in any of this. However, if you are a resident individual 60 years and above, so exact 60 will also get covered here, but less than 80. So can I say this is going to be 60 to 79, equal to 60 will be covered, but equal to 80 will not be covered. Equal to 80 will go in super senior citizen, but most importantly you have to be a resident. So if you are a non-resident, as already discussed, you are going to fall here. This is only if you are a resident 60 to 79, and this 60 years you can touch at any time during the year. Means if your previous year 20 to 23, 1st April 22 to 31st March 23, during this entire year at any point of time, if you have become 60 years, the full year you were 59, but on 31st March you become 60 years, so you will be treated as senior citizen for this year, provided you are a resident, of course. Not just that, 1st April of the assessment year means full year you were 59, but 1st April of the assessment year it is your 60th birthday, still you will be treated as senior citizen for this year, but again only if you are a resident. So at any time during the year or 1st April of the assessment year, if you touch 60, you get the benefit of this second category, but if you are a resident, this person will be treated as a senior citizen. The change being, the basic exemption limit will increase from 2,50,000 to 3 lakh rupees. That means senior citizens, if resident, will not be paying tax up to income of 3 lakh rupees. After 3 lakh, everything will be same. So till 5 lakh, they will be paying 5%. Difference being, in the previous category, 2,50,000 was taxed at 5%. But here only 2 lakh will be taxed at 5%, because 50,000, that is 250 to 3 lakh, has been sent in 0% basic exemption limit. So only 2 lakh will be taxed at 5%. Accordingly, the tax that you will get here is only 10,000 rupees, and that's the only difference between this tax and this tax. 50,000 ka 5%, if you check, 50,000 here comes in 5, but here goes in 0, and that's the only difference, 2,500 rupees, because after that 5 lakh to 10 lakh, this is going to be 1 lakh, because taxable at 20%, 5 lakh into 20, 1 lakh, and anything in excess over 10 lakh obviously is going to be taxable at 30%. In effect, up to income of 10 lakh, the fixed tax here comes to 1,12,500, but here comes to 1,10,000, and after 10 lakh, obviously everyone is going to be having 30% tax only in the old regime. Of course, till now the old regime is going on. We will go to the new regime in some time. So this is the tax that is going to be applicable to resident senior citizen 60 to 79. And the third category, if you are a resident individual 80 years and above, means exact 80 will fall here, but once again if you are resident. So if you are a non-resident, we have already discussed all throughout, non-residents will always come here. For falling in this, you have to be a resident, and for falling in this also, you have to be a resident. Resident individual of 80 years and above, once again this 80 can be achieved throughout the previous year, including 31st March or 1st April of the assessment year, and you will be treated as a super senior or a very senior citizen, wherein your basic exemption limit will increase to rupees 5 lakh. So up to income of 5 lakh, no tax, absolutely no tax, but after that everything is same. So 5 lakh to 10 lakh, 20%, 1 lakh out here, and that's their savings. The 12,500 of 5% bracket here or the 10,000 of 5% bracket here is not applicable, because the 5% bracket ka entire tax here becomes 0. Here the basic exemption is only given till 5 lakh, because after this it is same. And if we have to calculate, I'm sure you are aware, what we will do is pick up the total income and subtract 10 lakh rupees. apply 30% on that excess. Supposing your income is 12 lakh, then 2 lakh ka 30%, 15 lakh, then 5 lakh ka 30%, apply that. And then up to 10 lakh, what is the fixed amount of tax? For category A, 1,12,500. For category B, 1,10,000, and for category C, only 1 lakh rupees. That's how we calculate tax. And I have already told you that these are only the normal tax rates. There are some incomes which are going to be taxed at special rates. Section 110 to 115 BBI. So till last year it was only BBG. Now auntie has added BBH and BBI. There are 2 amendments that we will discuss obviously in special rates of tax chapter. So what we do is, every time there is an income taxable at special rate, we divide our income into 2 parts: normal income, normal rate; special income, special rate. Normal income, normal rate; special income, special rate. That is how we segregate our incomes and apply our tax rates. Obviously, whatever we have calculated, whether at the normal rates of the applicable slabs or the special rate, this is all only the basic tax, and we all know that the basic tax is going to undergo certain changes. So what are the changes that the basic tax will undergo one by one? First, the concept of rebate. This is for people like we will give you a reduction from basic tax. Mind you, rebate is not subtracted from income. Rebate will be subtracted from your basic tax liability. So first apply the rates that are taught above, calculate the basic tax, and from that basic tax subtract the rebate. In order to get rebate, the condition is going to be assessee has to be a resident. That means, can I say, if the assessee is non-resident, so disqualified from rebate. Condition 2 is that the assessee has to be individual. That means if the assessee is HUF, company, firm, LLP, then in that case obviously rebate is not going to be available. Only resident, only individual, and your income has to be less than or equal to 5 lakh up to 5 lakh, not exceeding 5 lakh. What is the importance here? Now people have the habit of saying less than 5 lakh, less than 5 lakh, less than 5 lakh, less than 5 lakh. That 4 lakh you get rebate, at 6 lakh you don't get rebate. But at 5 lakh you get rebate, but you have the habit of saying less than 5 lakh, less than 5 lakh. Accordingly, if the examination question is giving you the exact figure of 5 lakh, you will get confused. So develop the correct habit. Say the income has to be up to 5 lakhs, not exceeding 5 lakhs, or best less than or equal to 5 lakh your income. See, rebate you will get from tax, but check the income. Subtract from tax, but condition is on the income. Resident individual income up to 5 lakh. Resident individual income up to 5 lakh. Then how much will be your rebate? Actual tax that you may have calculated as per normal rate or special rate. Normal rate or special rate, or rupees 12,500 out of the 2, whichever is lower. Actual tax or 12,500, whichever is lower. So actual tax calculated as per these slabs, or maximum of 12,500. Actual tax or 12,500, whichever is lower. But what are the conditions to get rebate? Resident individual income up to 5 lakh. People like this take rebate. But then along with rebate, we also have the concept of surcharge, which is obviously applicable for people like this. I had a strong feeling that I should change this image and remove Ambani and put Adani out here. But honestly, the last few days make us realize that there is no point in putting Adani here. Let Ambani only remain here. So surcharge is going to be an addition in tax liability for the super rich people. For rebate, you have to be a resident, but surcharge will apply whether you are resident or non-resident, both. For rebate, you have to be an individual, but surcharge will apply for all. Individual, HUF, AOP, BOI, AJP, all will have surcharge. For rebate, there are multiple conditions, but for surcharge, there is only one condition. Your income should exceed that particular threshold which is prescribed out here. So let us see what is the threshold that they have given. First of all, let's be clear. No confusion. For rebate, resident individual income up to 5 lakh, actual tax or 12,500, whichever is lower. But for surcharge, only income exceeding the figures given. Then irrespective of whether you are resident or non-resident, or whether you are individual, HUF, AOP, AJP, later for company and firm also there is surcharge. Okay. But here we have discussed the basic tax rates only of these assessees. So we are discussing surcharge only of these assessees. What are the rates of surcharge for company firm, etc.? That we will discuss later, but they also have surcharge. For rebate, there is the condition of being individual, otherwise all other assessees have surcharge. How much surcharge will be attracted will depend on your total income. In rebate, they have said less than or equal to 5 lakhs. But in surcharge, they say if your income is exceeding 50 lakh up to 1 crore. So 0 to 50 lakhs income, no surcharge. More than 50 lakh and 1 up to exact 1 crore, then surcharge will be 10% of your basic tax. More than 1 crore up to 2 crore, then 15% of basic tax. More than 2 crore up to 5 crore, then 25% of basic tax, and more than 5 crore, then 37% of your basic tax. So basically, for surcharge, we have 4 different rates, but at one time only one will be applicable. Go check the total income. 40 lakh rupees, no surcharge. 80 lakh rupees falls in this, so 10%. 1 crore 80 lakh falls in this, then 15%. 2 crore 80 lakh falls in this, then 25%. 5 crore 80 lakh falls in this, then 37%. So at one time only one will be applicable, and that percentage will be applied on your basic tax. So once again, first you have to calculate basic tax. Normal, special, whatever is applicable, calculate the basic tax. Obviously, rebate and surcharge cannot coexist because rebate ka criteria is up to 5 lakhs and surcharge ka criteria is more than 50 lakhs. So they cannot coexist. If it is up to 5 lakhs, give rebate, finish the topic. But only resident individual up to 5 lakhs. If the income exceeds 50 lakhs, so equal to 5 lakh, yes rebate, but equal to 50 lakh, no surcharge. Greater than 50 lakh, up to 1 crore, 10% surcharge. Greater than 1 crore, up to 2 crore, 15% surcharge. Greater than 2 crore, up to 5 crore, 25% surcharge. And greater than 5 crore, 37% surcharge. Whichever is the percentage that is chosen based on the total income, it will be applied on your basic tax liability. Surcharge will apply on resident, non-resident, everyone. Surcharge will apply on all assessees. These are rates of individual HUF, AOP, BOI, AJP. Company firm ka we will do later, but surcharge is applicable to all assessees based on your income level. 10, 15, 25 or 37% of your basic tax liability will be your surcharge. But now comes the complicated part. This much was very easy. Chalo, we have understood when surcharge will come, how much surcharge will come. But now comes the complicated part. If you observe these rates of surcharge, 25 and 37, they are very high. So for people whose income is crossing 2 crore rupees. Okay. Now ignore this part. We have understood up to 50 lakh no surcharge, more than 50 up to 1 crore 10%, more than 1 crore up to 2 crore 15%. That much we have understood. So now ignore this part, focus on this side. The moment a person's income exceeds rupees 2 crores, this side, 2 crore up to 5 or more than 5. First of all, basic tax will be 30%. Basic tax is 30 after 10 lakhs only. Basic 30. On that 30, when we apply 25% surcharge or 37% surcharge, it's very high, plus cess is also going to come. So in other words, can I say high income earning people, they clearly protested, okay, what is this man? Kitna massive tax? Understand karo, 30%, and on that when we apply 37%, that comes to roughly about 41.1, and then 4% cess, 42.744% for people falling in this. So over the years, what Aunty said, that I am deciding that there are some incomes which you can say will be treated as special incomes. Whatever is the tax calculated on those incomes, these two rates of surcharge will not apply. 15 will be the maximum surcharge. And accordingly, we say that 25% and 37%, these two rates will not apply on the following incomes. Here there is an amendment also, but first I want a few things to be clear. What? The discussion is only about 25 and 37. That means your total income has to be more than 2 crores. If your total income is less than 2 crore or equal to 2 crore, you fall in any of these two rates, your topic is over. We are not having any discussion. Whatever complicated discussion we are going to be having here is only for those who have total income exceeding 2 crore means only those who are falling in 25 or 37% surcharge. If you are not falling in 25 or 37 surcharge, we are not having any discussion with you. Your topic is over. And now this 25 and 37 will not be applicable when we say, that means 15 is applicable. If you cross 2 crore, we may or may not apply 25 or 37. We are creating an exception. But 15 will apply. 15 hamesha rahega. Obviously, the moment you have crossed 1 crore crossed. So, if you are 0 to 50 lakhs, so 0% surcharge. More than 50 lakh to 1 crore, so 10% surcharge. More than 1 crore to 2 crore, 15. More than 2 crore, normally 25 comes. But for certain people, it will not apply. It will be 15. More than 5 crore, normally 37 comes. But for certain people, it will not come. It will be only 15. 15 will come. 15 is not going anywhere. 15 is not going. 15 is not going anywhere. 15 is always going to be applicable. I absolutely want no confusion there. Now, which are the incomes that we have been given here? If you have short-term capital under section 111, now this is a revision lecture. If it was the first lecture, then there can be confusion. Short-term capital gain, 111 is stock market, equity shares, units of equity or mutual fund, units of business trust. If sold on stock exchange, an STT is paid on sale transaction. Whether paid on purchase or no, not relevant, because purchase is required to suffer STT only under long-term capital gains. Then in that also only equity shares only after 110/2004. So यहाँ पे your capital gain will be taxed not at the normal rates but at the special rate of 15%. Then same long-term capital gain under 112A, excess over 1 lakh ka 10%. So if your gain is 5 lakh, 4 lakh ka 10%. If your gain is 10 lakh, to 9 lakh ka 10%. 10% on excess over 1 lakh. Difference being here, if it is equity shares purchased on or after 110/2004, then even purchase transaction has to suffer STT. And now along with these two capital gains, auntie says any long-term capital gain. What is 112? Any long-term capital gain. See, 112A covered only stock market long-term capital gain. But 112 covers capital gain on land, building, house, gold, jewelry, everything. If it is long-term, of course, 25 and 37 will not be applicable to any long-term capital gain. So, supposingly you have sold some property, crores of rupees ka gain you have. Long-term property will become long-term after 24 months. So, it's a long-term capital gain, crores of rupees ka capital gain, you know, maybe is 5 crore, 10 crore, 20 crore, 30 crore. That way, if you think, basic tax will be calculated at 20% because 112 ka long-term capital gain ka rate is 20. Once you calculate basic tax, then you apply surcharge. Surcharge is dependent upon your net taxable total income. Net taxable total income will also include this capital gain. Dekho yaar, supposingly your capital gain on house is 20 crore rupees and your salary income is 5 lakh only. 20 crore and 5 lakh is your total income. The salary will get taxed in slabs. 20 crore ka capital gain of property will come in 112 20%. But wo salary ka slabs ka tax and capital gain ka 20% together will become your basic tax, and then we apply surcharge, and surcharge ke liye the visible total income is 20 crore and 5 lakh. That means 37% surcharge will apply because total income is exceeding 5 crore rupees. The moment total income exceeds 5 crore, 37 applies. But auntie says, I want to make exceptions for these incomes. Total last year she had covered only stock market long term and short term, means 111A, 112A, and now the amendment is that any long term capital gain ka tax will be immune from 25 or 37% surcharge. There will be no 25 or 37% surcharge on 112. 15 will come. 15 will come. Then capital gain under 115AD for FIIs, which is there in special rates, and dividend income also. Sometimes there are high value investors, HNIs, ultra HNIs, they have got massive investments in the equity markets and they are earning crores of rupees of dividend income. Now that dividend is taxable for the shareholder, obviously that will increase our total income. But declaration of dividend is not under the control of shareholder, that is under the control of the company. The company is declaring dividend, I am getting that dividend ka profit and I am falling in the 37% surcharge ka bracket. So government says we will relax this also. Amendment is only this, rest was to existing. Effectively there are 5 special incomes: short term 111A, long term 112A or long term all, capital gain under 115AD for FIIs and dividend. Dividend, short term stock market, long term stock market, all long term as an amendment. So this is revision come amendment. Amendment is also being covered. And FIIs ka capital gain. First of all, you are not going to calculate, pay attention, this is one place where a lot of students go wrong. You are not going to calculate surcharge on the income that are given here. Dividend income के ऊपर we don't calculate surcharge. Capital gain incomes पे we don't calculate surcharge. Or on these short term capital gain, long term, not on the income. On this we calculate tax, basic tax, basic tax, basic tax, basic tax, basic tax. After we calculate basic tax, then we add surcharge. So what you will do is, your total income will be segregated into two parts. Special income, other income. Calculate tax on both. On the tax, apply surcharge. So on these incomes, we will never apply 25 and 37. It will be maximum 15. It can be less than 15 also. If your income is falling in this, yeah, less than 15. It can be no surcharge also. But maximum will be 15. Now whether these incomes are 5 crore, 10 crore, 40 crore or 100 crore, it will never be more than 15%. What? Surcharge. Surcharge will never be more than 15. And also be clear, it is not going to be calculated on the income. On these incomes, we will calculate tax. On the tax, the surcharge will be maximum 15%. The surcharge will be maximum 15%. So, even if your net taxable total income is more than 2 crore or 5 crore, surcharge of 15% will be levied on the tax that you have calculated on these incomes. Other incomes, they are more than 2 crore, you can apply 25%. They are more than 5 crore, you can apply 37%. But on these incomes, and all long-term capital gains will be covered now because there is an amendment. On these incomes, you calculate tax. So, calculate tax on these income, other income. These income, other income. These income, other income. These incomes ka highest surcharge will be 15. 25 and 37 not applicable. Understood now? And of course, on the other income, you can apply 25 or 37. But now comes one more complication. One more complication. If on the exclusion of these incomes, the NTTI is 2 crores or less, like my example, 20 crore long-term capital gain and 5 lakhs salary. Total income is 20 crore 5 lakhs. 20 crore 5 lakhs means we feel that 37 should apply. But have we made it clear that at least on this tax, so we will not apply 37? Ye jo incomes hai, these 5 incomes, on that we calculate tax, and on that so we will not apply 37. On this, we will not apply 37. We will apply only 15. So on the other income we can apply. Now other income is only 5 lakhs. For 25 or 37 to apply, that other income has to cross 2 crore rupees, then only 25 or 37 will apply. Otherwise only 15. 15 will apply. Mitro, this is where confusion should not come. Some people think, sir, other income is only 5 lakhs, so zero surcharge. No, total income has crossed 1 crore. Total income has crossed 1 crore, 15 will come. The discussion that is happening right now is on whether 25 or 37 will apply or not apply. 15 is fixed because you have crossed 1 crore. 15 will apply, 25 and 37 will not apply. On this, so it will never apply. And because of this, if you are crossing 2 crore, then on your other income also it will not apply. Let me do a small numerical for you to make you understand. You may be able to understand with the help of these numbers. Okay. 5 special incomes. Which are the 5 special incomes? 111A, that is short term capital gain stock market. 112A, long term capital gain on stock market. 112, purposely I am writing in red color because as per amendment this will also be covered. 115 AD, but only the capital gains in this, and dividend income. 5 special income plus other income will make your total income. 5 special income plus other income will make your total income. Now first of all understand, if this total income is less than or equal to 50 lakhs, so there will be no surcharge at all. Whether these incomes or these incomes, no surcharge, because surcharge comes after 50 lakh. If this total income is more than 50 lakh and up to 1 crore, this is my second example, so there is going to be 10% surcharge on the total. Total ke upar it will be 10%. But wait, When I say total 10%, matlab surcharge will not come on the income. This one confusion I want to eliminate altogether. 10% surcharge on tax. That is your basic tax. On that we will apply surcharge. So, on these incomes calculate tax, on your other income calculate tax and apply 10% surcharge on the total tax. If your income is crossing 1 crore and up to 2 crore, so once again, whether this side or this side, it will be 15% surcharge on your tax. So, till now, so whatever we have discussed is not applicable. Because people who are covered in 15% are not covered in the discussion that we are doing here. Okay. If your income falls in this range or this range or this range, then these are going to be your surcharge ka rates, irrespective of whether you have normal income, special income, anything. And surcharge will be calculated on tax. Now, fourth example, where your income is crossing 2 crore rupees. Okay. These special incomes, where 25-37 is not applicable, and the normal income where 25 and 37 is applicable. Okay. Supposingly, your special incomes are 4 crore, normal incomes 3 crore, total is 7 crore. So, now onwards, in all the examples, income has to cross 2 crores. Then only we are discussing 25 and 37. Income has to cross 2 crores. So, 7 crore rupees. If it is 7 crore, so normal answer is 37% surcharge. But now understand that these are the special incomes, 5 special incomes and other incomes. So, on these special incomes, will you calculate surcharge first? No, Mitro. Calculate tax on this, calculate tax on this. On this tax, we will apply only 15% surcharge, and on this tax, we can apply 25% surcharge because this is 3 crore. More than 2 crore, so 25%. Supposingly, this was 4 crore, this was 7 crore, total is 11 crore. By looking at 11 crore, our answer comes as 37% surcharge. No, but on this tax, we will apply only 15% surcharge. Only 15%. On this tax, you can apply 37% surcharge. So, that's the first thing that we have studied, that on these special incomes ka tax 25 and 37 not applicable. Okay. Now, let's talk about that person. 20 crore ka property ka capital gain, 112 also is covered now, and 5 lakh ka salary ka income is 20 crore and 5 lakh. By looking at this figure, the answer comes as 37%. But one thing we have all understood, that here the tax is going to be subjected to maximum 15% surcharge. This tax can never go beyond 15%. Highest will be 15. Now, here is where the confusion arises, that students start thinking, sir, ये तो less than 50 lakh है, so zero surcharge. नहीं, sir. 25-37 का applicability was being discussed. 25-37 का. 25 or 37 may not be applicable, but have you crossed 1 crore rupees? Yes. So 15 is going to apply. 15 is going to apply. This is where you have to be careful. This is where you have to be careful. This will never be less than 15. 15 will come because you have crossed 1 crore. If you had not crossed 1 crore, so you might have come here. Somewhere here. 15 will apply. 25 will not apply because this is not crossing 2 crore. 37 will not apply because this is not crossing 5 crore. And on this, even if they cross 2 crore or 5 crore, 25, 37 not apply. Lekin 15 will apply because you have crossed 1 crore. The moment you cross 1 crore, 15 will apply. If you have not crossed 1 crore, then you may fall in these cases. Then this discussion only is not applicable. No. Have we understood? Now with the help of numbers. So, even if NTTI is more than 1 crore or more than 2 crore or 5 crore, surcharge will be calculated at 15% only on these 5 incomes ka tax. And if on the exclusion of these incomes the NTTI is 2 crore or less, then 15% will come on the entire. If you can observe, entire ke upar we are applying 15%. That is the surcharge ka rule. And second amendment in the chapter, if an AOP has only corporate members, see, association of person is a group of people who have come together. If they have only companies as members, then maximum surcharge will be 15. In other words, you can say that for AOP, which does not have non-corporate members, only corporate members, so 25 and 37 will not be applicable. That's the second amendment that has come here. Within the concept of surcharge, we have a small concept of marginal relief. If you go through the numbers that we have done, very easy to understand. Marginal relief from surcharge. If the income exceeds surcharge threshold marginally, just exceeding the surcharge threshold, then the increase in tax cannot be more than the increase in income. The difference in tax cannot be more than the increase in income. The increase in tax cannot be more than the increase in income. How? Supposingly, two people, first person has income of 1 crore, second has income of 1 crore and 5,000. So, you can calculate basic tax of 1 crore by applying the slabs that we have studied. 90 lakh ka 30% will give you 27 lakhs plus 1 lakh 12,500. So, that's 28 lakhs 12,500. And here 90 lakh and 5,000 ka 30% plus 1 lakh 12,500 will give you this. So, 28 lakh 14,000. If you want proof of the difference, there is extra income of 5,000 here. This 5,000 obviously will go in 30%. 5,000 ka 30% is 1,500 and that's the difference here. 28 12,500 and 28 14,000. That's the difference. Now, do you understand this income is exact 1 crore, not exceeding 1 crore. So, here surcharge will be 10%, 281, 250. And this is exceeding 1 crore. So, here it will be 15%, 422, 100. Accordingly, when we add the basic and the surcharge, here we get 30, 93, 750 and here we get 32, 36, 100. This is basically applying the rates of surcharge. Now, please understand the difference in the two tax figures is 142, 350. So, here is the problem that the person B has earned only 5,000 more than the person A. B has earned only more than A, only 5,000 more than A. But his tax is increasing by 142, 350. The increase in income is 5,000, but tax has increased by 142, 350. How disastrous! Means if B conceals only 5,000 ka income, not much, only 5,000, his tax will fall by 1,42,350. And here comes the line, the difference in tax cannot be more than the difference in income. So, this difference will be restricted to 5,000. This is 30, 93, 750. So, this will be maximum 30, 98, 750. The difference cannot be more than 5,000. The difference in tax cannot be more than the difference in income, and this amount that we are subtracting from here, will be called marginal relief. The difference in tax cannot be more than the difference in income. And finally, the last step in tax calculation, we apply cess. Cess will always be applied at 4%. So, first calculate basic tax, subtract rebate if the assessee is eligible. There are some assessees who are eligible for rebate, resident individual income up to 5 lakh. Add surcharge, if any surcharge will also come if your income has exceeded 50 lakh rupees. Finish all the steps, basic tax, rebate, surcharge, everything, and on this amount apply 4%. That is going to be your HEC, and this will come always, no condition, whether you are rich or poor, whether 5% bracket or 30% bracket, whether company or firm or individual or AOP or LLP, everyone has to pay 4% cess on that tax. So, if your tax is 100, it is not 100, it will be 104, 200, so not 200, 208, 300, 312, something like that. 4% of your tax will be increased. These are, ladies and gentlemen, the tax rates of the old taxation regime as far as individual HUF, AOP, BOI and artificial juridical person are concerned. Now, if we talk about new tax regime under section 115 BAC, of course, which falls in chapter 12 special rates. So, a new tax regime is prescribed for individual and HUF, which is optional. Of late, a lot of people are talking about popularity of the new tax regime, but still it is optional. It is not compulsory. Assessee always has the option of going in the old tax regime. But how will your rates change? Up to 250, no tax. So, basic exemption remains same, and this is for all individuals and HUF. All individual and HUF. Matlab, if you are a senior, very senior, anyone, everyone will have this only. Up to 250, no tax. And then if you observe the slab, The slabs are continuously increasing by 2,50,000, 2,50,000 and the rates are continuously increasing by 5%. So 250 tak 0, 5 lakh tak 5%, 750 10%, 10 lakh 15, 1250 20, 15 lakh 25 and after 15 lakh 30%. Slab is of 250, rate is increasing by 5%. Slab is of 250, rate is increasing by 5%. Like we learn the tax in the old regime up to 10 lakhs. Category A 1,12,500, category B 1,10,000 and super senior citizen ke liye 1 lakh. Here you can learn it at 15 lakh ka level. At 15 lakh, if you want to know. At 15 lakh, the total tax that will come will be 1,87,500. You can check that this is 0. Now slab is of 250, rate will keep on increasing by 5%. So 12,500. In other words, you can say that the difference will be 12,500. 250 ka 5%, 250 ka 5% will keep on increasing. And if you don't understand, then do one thing. 250 pe apply 10%, you get 25,000. 250 pe apply 15%, you get 37,500. 250 pe apply 20%, you get 50. So if you observe, they're continuously increasing by 5%, 12,500. And here of course 62,500. This total will give you 1,87,500. So what we do in new regime, pick up the total income and subtract 15 lakh. Modiji's favorite figure. Subtract 15 lakh. Apply 30%. Total income minus 15 lakh into 30% plus 1,87,500. 1,87,500 is the fixed level of tax, amount of tax up to income of 15 lakh. 1,87,500. In the old regime, it is up to 10 lakh because after 10 we go in 30% bracket. But here after 15 we go in 30% bracket. So old regime mein up to 10 lakh we have 1,12,500 or 1,10,000 or 1 lakh. New regime mein up to 15 lakh we have 1,87,500. After 15 lakh it will be 30%, and this is for all individual HUF. No separate rate for senior or very senior citizen. In fact, if you observe carefully, they have given only individual HUF. That means here we can cover resident or non-resident, because the new taxation regime for companies, which is 115 BAA and BAB, and for cooperative society, which is 115 BAD, that covers only domestic companies or resident cooperative societies. But here they have not mentioned anything like that. Accordingly, we will cover all assessees. Good thing is that surcharge will come at the same rates, but obviously NTTI has to be calculated as per the new regime. What is the main feature of the new regime? That you have to forego certain tax benefits, certain exemption and deduction. It is an exemption free, deduction free regime. So your income will increase. So it is possible. Old regime mein income is 40 lakhs. So no surcharge. New regime mein income is 60 lakhs. So 10% will come. See, rate is same. 10, 15, 25, 37, 25, 37 not applicable in certain cases. But the income amount has to be checked as per the new regime. Cess will apply because cess to always applies 4%. And special rate, this is very important. Very important. That what you will do is, take your net taxable total income, segregate into two parts, normal and special. For this normal income, you can choose old regime or new regime, old or new, old or new, old or new, old or new. The special income will always go as per the rates of chapter 12. Special income will always be taxed at special rates. Special income always be taxable at special rates. And the hidden benefit of the new taxation regime is that the chapter of alternate minimum tax is not going to be applicable to the assessee. AMT is not going to be applicable. So surcharge will apply, cess will apply, special rate will apply, but AMT will not apply. If you want me to summarize the 6 features of new taxation regime, tax rates will be lower. Very clearly it is visible. Very clearly it is visible. Up to 10 lakh here, if you see that you get only 75,000 rupees. But there you get higher tax. 1,12,500, 1,10,000. Okay. So tax rate is lower, but income will be higher because you have to forego certain exemptions or deductions. So rate of tax will be reduced, but income will be higher. Forego some tax benefits. Special rate will apply. AMT will not apply. Surcharge cess is going to apply as it is. Okay. Plus, new taxation regime has got some conditions that you have to choose on or before the due date of return filing. All that you are aware, because this is a revision lecture. We will also revise as and when they come. So AMT will not be applicable to any assessee choosing the new regime. Here it comes. You have to decide on or before the due date of filing ROI. Otherwise, by default, you will be falling in the old regime. Now, Finance minister in 23 budget made an announcement that by default you will be in new regime and old you have to choose. But as I already told you, 23 ka budget is not applicable. Order a vape and chill with your existing books. Vape क्या होता है वो Google कर लेना, VAP Google कर लेना. Okay? Chill with your existing books. Chill nahi, chillum with your existing books. Once you Google the meaning of vape, you will understand what I am saying. Currently, the by default regime is the old regime. If you want new, then you have to choose on or before the due date of return filing. If you don't have PGBP, this is very important. Observe. If you don't have PGBP, supposing you are a salaried employee, retired person, you can change this every year. Matlab, old, new, old, new, old, new, old, new, old, new, 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 old, new, old, new, old, new, old, new, 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 old, new, old, new, old, new, new, old, new, old, new, old, new, old. You can change your option on a year-on-year basis. The people who don't have income from business or profession. So, salaried employees, retired pensioners, housewives who have rental income or dividend income or FD interest, something like that, they can exercise the option on a year-on-year basis. If you do not have business income, so you can choose between old or new on a year-on-year basis. If you want new, decide before the due date of return filing. Otherwise, by default in old. Current rule. But the confusing aspect is those who have income under PGBP. This is a little confusing. You have PGBP income. You can exercise the option once. Means, can I say you can go from old to new once? So, where are you now? New. You can go only once. You can't go every year. But after few years, you are like, sir, I am not comfortable in new, sir. So, come back to old. But only once. Means once you come back to old, now you cannot go again in new. So, go to new. More confusing than demonetization. Focus karo. Go to new once. They can go every year. As I said, old, new, old, new, old. Wapas karke dekho. You understood, no? They can go every year. Non-PGBP people can go every year. PGBP people can go from old to new once. Decide before the due date of return. Not comfortable in new, come back to old, but now not allowed to go back to new again. So, this is so very easy to understand. Every year you can change. I already showed it to you. Demo dikha diya. This is, you want to relate to your daily life. So, this is like entry to a cinema hall. Buy a ticket, you can go. Now, you are inside the cinema hall. Inside. You are not liking the movie. You come out. Now, you can't go back inside. It's a single entry. Accounts wala single entry nahi. Cinema hall ka single entry. One time entry ticket. Second time you will not be allowed. But if you stop having PGBP, stop doing business, then you become this assessee, no? Then you can decide on a year-on-year. So, those who don't have business, change every year. But if you want new, so before due date, you have to decide. Those who have business profession, you can go to new, come back to old, but can't go back to new again unless you stop business, then you can go on a year-on-year basis. But here comes the biggest problem of the new tax regime, that sab moha maya you will have to leave. A long list of exemptions, deductions and tax benefits that will have to be foregone if you want the new taxation regime. Long list of exemptions, deductions, benefits. Sab kuch chhodna pade. Forego everything. 20 tax benefits. When we are learning the full course, no, at that time it is difficult because first lecture you are not aware of all this. But now that we have completed our syllabus and you all are watching the revision lectures, you all are going to be a little comfortable. Section 10(5) mein, quickly I will do this. House leave travel concession ka exemption you get, uska benefit will not be given. Old mein you will get, new mein you will not. See, what is one common feature in all these 20? These are tax benefits, exemption and deductions which you can take in the old regime, but it will not be allowed in the new regime. Take in the old regime, not allowed in the new regime. 10(5) leave travel allowance. 10(13) house rent allowance ka exemption, allowed in the old regime, not in the new regime. 10(14) mein we have some exemption, children education allowance, hostel allowance, tribal area allowance. All that exemption will not be allowed with exceptions. Matlab they can be taken. So, transport allowance of Divyang, handicapped employees, 3,200 rupees per month, that will be allowed. If you have been given any office conveyance money, that will be allowed. if you are given any tour, travel, transfer money, that will be allowed, and daily allowance for absence from normal place of duty. These three exemptions are whatever you spend. So obviously, if you spend for official purposes, then whether old or new regime, you need to get exemption. So this will be allowed even in new regime. And this to support handicapped people, divyang people, disabled people, this will be allowed 3,200 per month. Matlab, these will be allowed in old as well as new. But the other thing, children education allowance, hostel allowance, tribal area allowance will be allowed in old regime, not allowed in new regime. Not allowed in new regime. Then 1017 May, if you are a member of parliament or member of assembly, you get daily allowance and constituency allowance. That is going to be exempt. But in the old regime, new regime mein no exemption. If minor ka income is clubbed with the parent, the parent gets an exemption. Amount clubbed or 1,500 per annum per child, whichever is lower, allowed in old regime, not allowed in new regime. SEZ ka deduction. So pura chapter hai, first 5 years, next 5 years, last 5 years. Allowed in the old regime, not allowed in the new regime. Under section 16, we get deductions from salary, standard deduction of maximum 50,000. Entertainment allowance for government employee, professional tax paid only if paid. Allowed in the old regime, not allowed in the new regime. 24B, interest on housing loan of self-occupied property. SOP. SOP ka interest not allowed. Dekho, SOP mein you don't show any income. So that interest ka deduction becomes the loss. Not allowed. Not allowed. And now, I would like to tell you about one mistake that ICAI made in the November 22 RTP. Very clearly. If you go and read 115 BAC, it is very, very clear that interest will be disallowed only if the property is self-occupied. That also in the new regime. Dekho, one thing is clear that all this will go away in the new regime. Old regime, you will get everything. You have to forego under the new regime, new regime, new regime. Where do you have to forego in the new regime? Where do you have to forego in the new regime? Old mein it will be allowed. Forego ka karna hai? New regime. Correct? And it is clarified that it is going to be SOP. And I have said therefore SOP bola hai, matlab LOP, DLOP mein allowed. But November 22 RTP mein there was a question where assessee was in new regime and ICAI in the suggested answer said that interest ka deduction also not allowed. I think standard deduction also they did not give. I think standard deduction also they did not give. Yeah, I think municipal tax. They said that LOP may be no deduction. Rubbish. Rubbish. You can go and check 115 BAC if you want. Okay. It has mentioned that self-occupied property ka interest will not be allowed. LOP, DLOP ka interest will be allowed. Additional depreciation which is available to manufacturers 20% on cost in the old regime, not allowed in the new regime. This you can cancel because it was applicable only till 1920. Now this is not applicable in the old regime also. So you can cancel. Tea, coffee, rubber and site restoration ke business mein you get a deduction in the old regime, not allowed in the new regime. Scientific research ke section mein totally there are 7 categories. Usme se 1 is applicable to only company. So that is not applicable here. Out of the remaining 6, 2 will be allowed in the new regime and the remaining 4, 1, 2, 3 and 4. These 4 will not be allowed in the new regime. In old, all will be allowed. But in new, only 2 will be allowed. Which 2? 35(1)(1) and 35(2). Revenue or capital expenditure for own business. 35 AD, investment link deduction. AO deduction law, 14 specified business. Allowed in the old regime, not allowed in the new regime. Agriculture extension, 100% deduction of capital or revenue expense. Allowed in the old regime, not allowed in the new regime. Deduction against family pension, 1/3 or 15,000 per annum, whichever is lower. IFOS mein milta hai. Allowed in the old regime, not allowed in the new regime. Any chapter 6 deduction, this is where you are going to be the worst affected or the highest effect of this is going to come in your life out here. Chapter 6A deduction will not be allowed in the new regime. So chapter 6A deduction will be allowed only and only and only in the old regime. Chapter 6A deduction will not be allowed in the new regime, subject to exception. Matlab ye allowed hai even in the new regime. These will be allowed even in the new regime. 80 CCD2, employer contribution to NPS. You know why? This is first added in your salary. So you have to give this deduction. Employer is directly contributing in NPS, but we are adding in the salary. So we have to give the deduction. 80 JJAA, deduction for employment to new workmen, 30% of the additional employee cost. This is one deduction that they have tested repeatedly in the big MCQs. Case study based MCQs. They give you income as per old regime, ask you to calculate as per new regime. So we have to disallow certain deductions, but this will not be disallowed. This is allowed even in the new regime, and IFSC gets this deduction under 80 LA in class I teach in special rates of tax chapter. 100% deduction of profits of 10 consecutive years out of first 15 years, if you remember. So 80 LA deduction in respect of unit in IFSC. Okay. These three will be allowed even in the new regime. Furthermore, all the above tax benefits which you are foregoing, so current year mein to not allowed, of course, now that you are going in new regime. Is it possible that last year you were in old regime? So you were eligible for deduction, whether scientific research or specified business, but you did not have sufficient profit, so you carry forward. So current year mein it is brought forward. Are you going to new regime? So that brought forward also will lapse. In other words, you can say current year mein all this will not be allowed and brought forward will also lapse. Then house property ka loss against other incomes. If you have loss under house property, LOP mein there is unlimited loss possible, SOP mein there is limit of 2 lakh. We are allowed to adjust against other incomes, but subject to maximum of 2 lakh rupees in the old regime. New regime mein not allowed, and any exemption of allowance or perquisite under other law. For example, gratuity mein there is an exemption under payment of gratuity. Yeah, retrenchment compensation mein there is an exemption as per Industrial Dispute Act. So any exemption that you are getting as per other law will also not be allowed. These are the 20 tax benefits that will have to be foregone in case the assessee is interested in going to the new taxation regime. New regime ke andar you have to forego these 20. Then you get a reduction of tax rates 187,500. अगर old regime में you calculate 15 lakh के ऊपर tax, say 10 lakh के ऊपर it is 1,12,500 and 5 lakh का 30% if you do, so you will get old के अंदर you will get 262,500. The difference is 75,000 rupees. The highest savings in tax can be 75,000 rupees, not more than that. Not more than that. But can you imagine the amount of deductions that have to be foregone? That can be in crores of rupees. One line I always speak in class. I don't know how many people will be able to grasp it. If you are a final CA student, maybe you will understand. Intermediate student, maybe, may not be. I speak one line always in class. That if the new regime is beneficial, that we don't know, we have to calculate and find out. If the new regime is beneficial, the maximum benefit is 75,000 rupees. It can't be more than that. Profit side, benefit side, maximum 75,000. But if the new regime is prejudicial, harmful, then the harm can be unlimited. The loss can be unlimited. If the new regime is harmful or prejudicial, unlimited it can be. And that is clearly evident with the kind of tax benefit that you have to forego. Moving on, now we go to the tax rates of cooperative society. First old regime, then we go to the new regime. Old regime is very simple. There is no basic exemption limit. So up to 10,000, 10%. After 10,000 up to 20,000, 1,000 कैसे आया? ये 10,000 का 10% is 1,000, no? 1,000 plus 20% on the excess over 10,000. Or you can say 10,000 to 20,000 का slab में rate is 20%. And after 20,000 we get 3,000. Now how did this 3,000 came? देखो यहाँ से we will take 1,000 and from this 10,000 का 20%, 2,000. So 1,000 plus 2,000, that will make it 3,000. Up to 20,000 there is 3,000 tax, and after that 30% is going to be the tax. Rebate is not applicable obviously because rebate is only for individual, not applicable for HUF, AOP, BOI, AJP also. Surcharge will come. There is an amendment. If I have to speak amendment, normal students can now, who are doing this as a revision, can understand. I already told you, you cannot take these lectures as your first time study or your only study. Nothing you will understand. Everything will be a bouncer, obviously. But what I can say is, till last year the surcharge was same as partnership firm. After 1 crore, 12% till infinity. Now the surcharge is same as domestic companies. And if you don't understand, just see what is the amendment. If your income is exceeding 1 crore, then 7%. And if your income is exceeding 10 crore hoega. 10 crore. Printing mistake, please correct it. 12% of the basic tax if the NTTI is exceeding 10 crore. Up to 1 crore, 7%, more than. Up to 1 crore, 0%, more than 1 crore, up to 10 crore, 7%, and more than 10 crore, it will be 12%. Till last year, it was more than 1 crore, 12% up to infinity. But now, this is same as domestic company, 0 to 1 crore, no surcharge, more than 1 crore up to 10 crore, 7% surcharge, more than 10 crore, 12% surcharge. And cess of course will always come. Basic plus surcharge के ऊपर 4% cess will be applicable. We also have a new taxation regime, but that is only for resident cooperative society. So here is the difference. In 115 BAC they write individual HUF without mentioning anything, but here they say resident cooperative society. So accordingly it will be 115 BAD में only resident. In fact BAA, BAB which are for companies, there also they have mentioned domestic, but here also they have mentioned resident. Only in BAC you have the freedom. One more difference, in 115 BAC we already saw that non-PGBP can change every year. PGBP can go in new, come back to old, but can't go again. But in the other three sections, which three? BAD for cooperative society, BAA and BAB for domestic companies. There it is stated that once you go in new, you will stay in new lifetime forever. You don't have the option of coming back to the old regime. Option once exercised will apply forever and can never be changed. So basic tax rate of 22% flat. So here there are slabs in the old regime, but here it will be flat 22%. Immune from applicability. This is the hidden advantage, that AMT will not be applicable. Surcharge will come flat 10. See, there is one more difference. Here surcharge depends on income. Up to 1 crore no surcharge. Amendment hai. So focus. Up to 1 crore no surcharge. More than 1 crore up to 10 crore 7%, and more than 10 crore 12% surcharge. But here flat 10%. So can I say 22 plus 10% always, just like cess, and 4%? Cess to always comes. Effectively you can say 25.168% is going to be the effective tax rate of cooperative society, resident cooperative society in new regime. But if there are special rates, it will apply. This I already told you. Total income will be divided into normal and special. Normal income may you can choose old new, but special income will always be at special rates irrespective of regime, and AMT will not be applicable. You have to exercise your option honor before the due date of filing return, which is the case of everything in the new tax regime, existing law. Next year say auntie has said that default regime will be new. Old chahiye, so you have to exercise. By default you will be in new. And the best part is, once exercised you cannot change it. This is going to be applicable forever. So once exercised you cannot change it. In BAC you had the option of changing non-PGBP every year, PGBP once, but here and BAA, BAB companies wala also, once taken you can never change. So for students perspective this is a little easier, less complicated. Once you, this is like ICAI ka course, you go from old course to new course, you can't come back to the old course. It is like that. Okay, you will stay in new. And of course tax benefits have to be foregone here also. Good thing is that there were 20 in 115 BAC. Here there are only 10, and these 10 are out of those 20. So some of them which are applicable only to individuals, like salary ka all the benefits, leave travel concession, HRA, standard deduction, like your family pension under IFOS, ya MP MLA allowance, just 10 you remove, the remaining 10 are here. Which one? SEZ ka deduction, additional depreciation, this you can delete, as I told you that this was only till 1920. Tea, coffee, rubber, site restoration, scientific research, again out of 7 this is not applicable because this is only for company. These 2 will be allowed when you do capital or revenue expenditure for own business. These 4 will be disallowed in the new regime. Specified business 35 AD not allowed in the new regime. 35 CCC agriculture extension not allowed. Chapter 6A with only one exception, 80 LA. Anyways the other 2 were not applicable to cooperative society, and with respect to these, if there are any brought forward benefits also, they will also lapse. Brought forward benefits also not allowed. These are the new rates of and the new rules of cooperative society. As far as partnership firm, LLP and local authority is concerned, their rates are same, but I will be discussing them later in the chapter assessment of partnership firms. Likewise, company ka tax rates, both old regime as well as new regime 115 BAA and BAB will be discussed in a chapter called minimum alternate tax. So baad mein, abhi time. Later on we will be discussing these rates. This is the first chapter of our revision cum amendment lecture. We already saw 3 amendments. Here 112 ke upar 25 and 37 not applicable. Second, the AOP which has only corporate members, so maximum surcharge will be 15, again 25 and 37 not applicable. Third, cooperative society ka old regime ka surcharge is now same as domestic company. More than 1 crore 7%, more than 10 crore 12%. Okay, we still have time because we have taken the decision that the lectures will be minimum 1.5 hours and maximum 2 hours. That is going to be the minimum and maximum range of our revision lectures. So we cannot discontinue just after one chapter. We will continue in our episode 1 itself. Now see, देखो intermediate का students add relevant stuff till now. Now some chapters may not be relevant. So now the next chapter is from international tax of CA final. इसके बाद there is one chapter called cash loans which is also for CA final. But after that there is NRI taxation. That way NRI taxation is also CA final. But उसके अंदर we do residential status. Now residential status is a part of inter syllabus also. So that part of NRI taxation we will have to see. So what I will do is a thought strikes me now that in the description I will always mention which part the intermediate students also have to watch. In the description of the every video के description में I will mention that which part you have to watch. If that entire lecture is irrelevant for intermediate students, so in the description to the video I will write that only for final C. And if there is relevant part of inter students like today introduction में tax rates, of course relevant for inter student also. So I will mention that inter students का following topics are covered in this video, and of course final के लिए तो everything that I am doing is applicable. Moving on, next chapter, double taxation avoidance agreement treaty convention. One of the most important, the most important concept of international tax that we have. Globally there are two principles of levy of tax. Globally whenever and whichever country levies income tax. There are so many countries in the world which don't have any income tax, but in case a country has to levy income tax, globally there are two principles of levy of tax on income. Principle of resident. If you are a resident of any country, that country will be called a home country, and that country will tax you on your world income, global income. And the principle of source. The country from which you earn that income, that country will be the host country, the country from where the income was derived. That country will tax you on the principle of source. For example, in India, if you are a resident, you pay tax on global income. This so even inter students should know. If you are a resident, you pay tax on your global income. But if you are a non-resident, you pay tax only on your Indian income. But you do pay tax on your Indian income on the source of principle. So principle of residence, where we tax residents on their global income, and principle of source, where we tax non-residents at least on their Indian income. So now what is possible is that if there is a resident of one country, income in other country, resident in one country, income in other country. So the home country will apply principle of residence and the host country will apply principle of source. For example, a resident in India has income in UK, London. So India will apply resident principle, home country will levy tax, and UK, London, England, जो बोलना है बोलो, they will apply the host country का principle of source, and this will give rise to double taxation. When you have residence in one country, source in another country, both countries will levy tax. This will give rise to double taxation. Double taxation is of two types. There is something called juridical double taxation. Juridical double taxation, when the same person on the same income is taxed twice. Same person, same income getting taxed twice. Same person, same income getting taxed twice. The example that I gave you right now, London wala, resident of India, income in London. So India will levy tax on the principle of residence and England will levy tax on the principle of source. Same person, same income getting taxed twice. That is juridical double taxation. Examples I have given in pink color all throughout my book. Person who is resident of India, here I have written New Zealand, say 100. Indian tax rate is 30, New Zealand tax rate is 40. So tax in India, principle of residence, home country, 30. Tax in New Zealand, principle of source, host country, 40. And accordingly, the total tax on 100 is 70. Same person is paying both taxes, same person, same income getting taxed twice. That is juridical double taxation. Further, we also have the concept of economic double taxation, where again, same income tax twice. Sir, here also, same income tax twice. Here also, same income tax twice. But the main difference is, here, tax twice for the same person, but here, tax twice for different person. So, same income tax twice, same income tax twice, same income tax twice. But under juridical double taxation, same person is paying. So insert your hand in your pocket, both tax liabilities are going from your pocket. But under economic double taxation, one person is paying only at one place, other person is paying at the other place. To give you an example, A company in India pays audit fees to a CA 1 lakh in cash. The CA will pay tax under PGBP. You have to declare 1 lakh irrespective of which mode you have received. So can I say 1 lakh will be taxable for the CA? But the company will not get deduction because of the disallowance. Cash expenditure in excess of 10,000 is disallowed under section 40A. And thus the company will have to pay tax because disallowed expense will get added back in the income. Under PGBP we add back, no? Then can I say CA and company both are paying tax on that 1 lakh? CA is paying tax, company is not getting deduction. CA is paying tax, company is not getting deduction. Different people. And ladies and gentlemen, very important to note, double taxation relief will be given only in cases of juridical double taxation. There is no relief in cases of economic double taxation. Economic double taxation में कोई relief नहीं. Logically नहीं. Logic number 1, एक तो it's punishment in nature. It's a violation, that is why double taxation came. If you had paid this in check, then the double taxation would have never arisen. Second, if you think about it that way, agreed, government is getting twice because CA is paying tax and company is not getting deduction. But you are not paying twice. You CA, Mr. CA or Miss CA or Mrs. CA, there are so many married students also. You are paying tax only once. Did we take twice from you? You don't have any hardship. And you company, you have done violation. You are paying only once. Government is getting twice, that is not your problem. You are paying only once. देखो juridical में same person के pocket से it is going in both countries. But under economic it is being paid by different assessees. So you don't get any relief. Ladies and gentlemen, boys and girls, Deviyo Sajjano and Mitro, this clearly means that from now onwards, whatever relief part we will be discussing will be applicable only and only for juridical double taxation, because there is no relief in cases of economic double taxation. To protect the assessee from genuine hardship of levy of tax on the same income twice in juridical double taxation, there are two types of relief given in income tax. When bilateral relief will be given under section 90 or 90A, or it can be unilateral relief under section 91. What is the difference? When both governments cooperate, can you see the friendship here? Can you see the friendship? And this guy is wondering, why am I wearing the mask? Because they are close to each other. Can you see how close they are? How they can spread the virus? Hachi and all. Yuck. But here, he is alone. Nobody is doing friendship. Nobody is being friends with him, doing friendship with him. वो एक गाना याद आता है. Some 15 years ago, I had heard this song. Lonely, I am so lonely. I have nobody to call my own. I think Akon, I don't know who was that guy, but English song. ठीक है, sometimes you have friends, sometimes you are alone. It's all part and parcel of life. ठीक है, point क्या है? When don't go into the meme culture here. Here memes are only to make the hook a little interesting. Ultimately, concept is the king. The concept is the best thing. Logic is the best thing. So focus करो. When both governments cooperate with each other, they will sign an agreement with each other, and the relief will be given according to the agreement, and that agreement will be called double taxation avoidance agreement or treaty or convention. But when both governments are not cooperating, possible. I mean, North Korea ka guy does not cooperate with anyone. If there is non-cooperation, then there will be no agreement because the governments are not cooperating. Then relief will be given to the residents of India by government of India. So when both governments together give you relief, then we call it bilateral, as the word indicates. Both governments are giving you, but when only government of India will give, it will be unilateral relief under section 91. What is the double taxation avoidance agreement? Agreement between governments of two countries to avoid double taxation. Government of India has entered into DTAA with many countries. If you want me to give you the number, roughly about 120, round figure I am saying, roughly somewhere near that. Obviously, all the double taxation avoidance agreements are different from each other as far as the calculation of relief is concerned, but every DTAA in the world will provide, obviously for relief, that's the primary reason, and both government will exchange of information. If resident of country A is making any financial investment in country B, so they will exchange information with each other. With this, government of India will be able to find out about your financial transactions in other countries. So this benefit also will be there of cooperating with each other. Let's discuss what is bilateral relief. Section 90 के अंदर government of India will enter into DTA with foreign government to give relief, where Juridical double taxation means one country has residence ka source, one country has residence ka principle, other country has applied source ka principle. So we will give you relief, where there are two methods of giving relief. There is a method called tax credit method, where both countries will take tax, but one will give you credit of the tax that you have paid in the other. Matlab, if we take the India New Zealand ka example, New Zealand will also take tax, India will also take tax. But New Zealand is saying, I will give you credit. So my tax is 40, but take credit of what you have paid in India, pay only 10. So India will take full 30, New Zealand will give you credit. Reduce 40 to only 10, but you are getting relief. And second way is tax exemption method. One of the country will take tax, other country will make it 0. For example, in India or New Zealand ka example, India makes your 30 ko 0 or New Zealand makes your 40 ko 0. That means one country is taking, other is leaving. Now, which country will give credit, which country will give exemption, or which method will be followed, everything will be dependent on what they have decided on the agreement. But globally, there are two methods, credit method and exemption method. Under credit method, both will take, but one of them will give you credit of what you pay in the other country. And under exemption method, one country will take tax, other country will forego the entire tax liability. One of the most important points to note, that if the normal provisions of the income tax are more beneficial, then the assessee can take the applicability of normal provision. In other words, DTAA is also optional. तुमको option दे रहा है रति शंकर शुक्ला. If you know this guy, you have a very good adulthood. I will not say childhood. You can, for those from South India who don't know about this guy is from a Hindi web series Mirzapur. And if you don't watch Mirzapur, that means you are missing some really good stuff in life. Google Lens say, check this out. Who is this guy? Rati Shankar Shukla. And this is a very popular scene also. तुमको option दे रहे हैं. Obviously, here I have to make the stars because I can't write the actual word that he used. You know how web series are made, no? Okay. So in other words, you can say that DTAA ka provisions are also optional. DTAA ka provisions are optional. Now I am getting a feeling that यहाँ से रति शंकर शुक्ला को निकाल के I should paste auntie का photo, but that can invite a criminal proceeding, so I can't do that unfortunately. Okay, the classroom में comments we can pass, but I can't keep it on record. Yeah. Coming back to the point, DTAA is not compulsory. If your normal tax provisions are beneficial, you can take that. Okay. Similar agreement to DTA can be entered into by specified association in India, between a specified association in India and outside India. Like ICAI can have an agreement with AICPA, something like that. American Institute of Certified Public Accountants or UK CMA Institute or anything like that. Government of India can also enter into something called Tax Information Exchange Agreement with a non-sovereign territory. Supposingly there is some country which does not levy income tax. If that country does not levy only income tax, there is no sense in doing DTAA, double taxation avoidance agreement. There is no double taxation only. But we still need to exchange information, no? So we can enter into something called TIEA, Tax Information Exchange Agreement. Misuse prevention short में आपको बोलूँगा. Supposingly there is treaty between India and Germany. So benefit will be for Indians and Germans. Obviously there will be no benefit for Australians. Australians are cheaters by birth. There is no benefit to Australians in this. But there is an Australian who opens an office in India or Germany, only takes it on rent, keeps it locked so that he has only an address proof in India, does not do any business or transaction from there, only uses that place for address proof. To go to the cheapest real estate area of the country, India mein you can go to any remote village and take some small place on rent and keep it locked, no? Now this Australian is presenting himself to be Indian. That's misuse. That's called treaty shopping. Advanced international tax may we also call it treaty abuse. That will not be allowed. Such people will not be eligible for tax relief under any treaty. Residents of third countries will be disqualified. Of course. Of course. Resident of third country ko we don't have to give any benefit. Next, tax residency certificate. If you are a non-resident in India and you are taking DTAA benefit, on what ground? That you are resident in some country. and as per the treaty, that country should get tax. So India will leave tax. No problem. Non-resident ho, and as per treaty, country of residence will take tax. See, treaty by treaty we can decide that. India is ready to leave tax, but bring it in writing from that country that you have become a resident. India mein you are non-resident, but there you have become a resident or no, who will come and check? So you will have to bring in writing that you have become a resident over there. If you are able to bring in writing that you have become a resident over there, so we are ready to give you relief, but only if you bring tax residency certificate from your home country, then only you will get relief. Otherwise, you will not get relief. Non-discrimination clause. Non-discrimination is a promise that we make under the treaty. For example, India-Germany treaty. So India will promise Germany, hi Germany, I will not tax your people more than my people. I will not tax your people more than my people. The taxation of foreign assessees shall not be less favorable. Matlab, we will not take more tax compared to domestic assessees. However, this is not applicable to foreign company. The foreign company ko bhi take tax at 40%, which is higher of course than domestic company ka. India mein income tax rate is 30-25. New regime mein to 20 to 15 diya. We will see in MAT ka chapter. This will not be covered under non-discrimination. In other words, foreign company ke against we are allowed to discriminate. We can take higher tax. Non-corporate assessees ko we will not create any discrimination. This is bilateral relief ka revision. Hardly you will get to see any question on bilateral relief in exam. Maximum questions in exam come on unilateral relief. Section 91. When there is no DTAA, there is non-cooperation, and you have income from a country outside India, you paid tax also in that country, so you will get unilateral relief. But all this is okay. 6 kaise likha hai, 4 hai, kuch bhi likhta hai, 4 hai, 4. All this is time pass. The most important condition is that unilateral relief will be given only if you are a resident. All other conditions are okay. Unilateral relief will be given only, of course, you are resident. That means you are earning income outside India. You are bringing foreign money here. That government is not doing treaty. So we can't do anything that you pay over there. Uske tax ka we can't do. Our tax we can give you relief. And thus unilateral relief will be given only to resident. Where there is no treaty, but you are a resident, we will give you unilateral relief. Highest number of questions in exams come on this. Very easy calculation it is. Compute the net taxable total income. That will obviously include your Indian income and foreign income. On that, calculate tax liability in India, whatever regime you have chosen, old or new. Decide the average rate. Now see, India mein tax is calculated at slab rate. So there will be some income in 0%, some in 5, 10, 15, 20, anything can come, especially if it is new regime. Find out average rate, means what is the total tax upon total income into 100. What is the average Indian tax rate and what is the foreign tax rate? At what rate you have paid tax in the foreign country? Government of India will be giving you relief at Indian rate or foreign rate, whichever is lower. India ka rate, how will you find out? Total income, total tax and average rate. Indian rate or foreign rate, whichever is lower. And finally, we will give you relief on the doubly tax income that is included. This is very important. Sometimes there is some foreign income. On the entire income, you paid tax in the foreign country. Say royalty income of 5 lakh, you paid tax in the foreign country. But in India, when you come with your royalty income, you take a deduction of 3 lakh 80 QQB, assuming old regime. So in India, in your total income, you have included only 2 lakh rupees. That means you have not paid double tax on 5 lakh rupees. In India, you paid tax only on 2 lakh. So what is that income on which double tax has been calculated? What is that amount on which both countries have taken tax? Foreign may agreed 5 lakh, but India may 5 lakh pay, you have not paid tax. No, you paid tax only on 2 lakh. So doubly tax income is only 2 lakh rupees. So that income will be eligible for relief. Doubly tax income included in NTTI into the lower rate which Indian or foreign, whichever is lower. Doubly tax income included in NTTI into the lower rate with the help of an example. Supposingly there is a resident age 32 years, Indian income 8 lakh, foreign income 7 lakh, and the foreign income is in country A where there is no DTAA. And that country has taxed Mr. X at 20%. First check whether there is double taxation. 8 lakh will be taxed only in India. 7 lakh will be taxed in India as well as outside. Outside India, though, they have given only 20% you've paid. And in India, because you are a resident, so global income. taxable. That means can we say on 7 lakh there is double taxation? And there is no DTAA, so unilateral only will have to be given, bilateral is not possible. And unilateral के लिए देखो income outside India, tax outside India, no DTAA, we have already checked. The most important condition is that assessee has to be a resident. Eligible, first find out the total income. Total income के अंदर we will include 8 and 7 both, 15 lakh rupees. Tax we will be calculating because there is no information about any exemption or deduction, then we calculate as per new regime. If that was given, no any exemption or deduction, so we'll have to calculate both old regime as well as new regime. इसके लिए do one thing, go for our question answer course. I solved more than 430 questions in class in my full course lectures. So whenever I do question answer, no, that part of the video is cut, and that question answer course is separately available. So you can take full course which covers everything. Crash course maybe don't give question answer. That question answer can be taken separately. And of course, that question answer is only the class questions. Everyone is aware of the additional question bank. 100% coverage of ICAI database. You will not find a single question in any mock test paper or past paper or any RTP or MTP or anything, or any study material ka any page ka illustration that we have not covered in our additional question bank. Our additional question bank covers everything. That is not there in the video, but in the solutions everything is given to you. So if you take the question answer course, only the classroom wala part, there also you will understand when we calculate old and new, both we have such questions covered in our regular lectures ka classroom. This is not for marketing, but in case you have taken the crash course, you should definitely take the question answer course, and for your self practice, you should take the additional question bank, for which there is no video available, but there are certain things you should also practice on your own. I don't have to go and give the exam. No, you have to give the exam. Okay. So here we will calculate as per new regime because there is no information. 15 lakh pe 187,500 plus cess, of course, 1,95,000. So can I say on total income of 15 lakh we have 195 ka tax? Accordingly, the average rate of tax will be 13%. It is coming as round figure. Decimal hoega to 2 decimals you have to take. Indian tax is 13. Average we have done because multiple rates are applied. And foreign ka to 20 is given in the question. So Indian rate or foreign rate, whichever is lower pay, you will get relief on what? Not on 15 lakh. What is that income on which double taxation has been calculated? 8 lakh was taxed only in India. On what income you paid double tax? 7 lakh. So 7 lakh ka 13%, 91,000 will be your relief. Doubly tax income included in DTAA into lower tax. And finally, if they ask you the final tax liability, 1,95,000 was your tax before relief. Give relief of 91,000. Accordingly, you will get 1,04,000 as your relief. This is how relief is calculated under unilateral section 91. Highest number of questions come in this. I strongly recommend that you should take up the question answer course for video and the additional question bank for your practice. And MCQs of course are there only. It is an open challenge. 2,700 questions ka database hai. Anybody solving 2,700 questions, which includes 1,900 MCQs and 850 subjective descriptive questions, exemption is guaranteed there itself. Okay, book ka name is also exemption 3.0. So ladies and gentlemen, that was our second chapter, one of the most important topics of international tax. We have almost touched the time frame of 1.5 hours. So being the first lecture, we will stop here. I hope you have enjoyed this live session of revision. Like this, we will be doing 1.5 to 2 hours regularly, and we will in roughly about 10 sessions we will be completing your revision. So thank you for watching. Have a nice time. Thank you very much.